Welcome back. Shifting focus to the commodity markets now, Manisha Gupta is joining in. Manisha, what's the one commodity that you're tracking today?
Well, I'm looking at copper and steel, and we have seen prices of both of these decline yet again in the markets today. You know, we did see prices try to rise in the month of September, but we have been far away from those January highs, and we have seen some more decline come in for many of these. So September, October are basically high seasonal period for construction and manufacturing, but we have seen those numbers kind of gain in the month of August, but they still are down year-on-year basis, and September numbers have continued to be on the weaker side. So it is about weak Chinese demand, and that can clearly be seen in case of inventories, because when you look at the LME inventories for copper, they have gained up by 200% in the month of July itself, and we are almost nudging around that 170,000 tons for LME. We also have seen inventories gain up in Shanghai and in case of New York as well. Well, apart from that, the US dollar index trading at a 10-month highs. We have seen all other Asian currencies kind of decline. Euro is trading at around 6-month lows as well. So that in turn also seems to be weighing on to many of these metal prices. Another important thing is that China TCRC, which is the treatment and refining charges, they are now at a 6-year high, is how they have been fixed for the fourth quarter. Now, you know, the way to look at this is that when you have ample supply of concentrate into the market, then you see the TCRC prices rise. If there is a contraction, then you see the prices decline. So this is another clear indication with the TCRC prices for the fourth quarter also at a 6-year high tells you that the supply is going to be on the higher side here. And then the production has been increasing in Chile. The earlier estimates clearly have been broken, and we are looking at higher production here as well. The global concentrate market, this is an important number to watch. That also is expected to see surplus in 2023 and 24 as well. So that means there is copper in abundance for this year and next. Until you see that energy transition demand come in or the Chinese data start to pick up and that demand continue to come in, you are perhaps looking at some consolidation, even some declines coming in for the copper prices. That's exactly what you have seen for the ferrous metals. Yesterday was a better day, but today we're back again into the negative. So if you look at iron ore prices, we're trading at a 2-week lows. Steel prices trading at a 4-week lows as well. And there was this Wall Street Association report that came in yesterday, which says that steel output in the month of August has seen a jump up yet again. And these are the top 5 countries which produce steel. And as you can see, barring Japan, we've seen increase in steel production from all other countries, including India as well, where 17% of a jump is what we've seen in the month of August. This is an year-on-year change here as well. An interesting report from Moody's also came in the last night, which says that India's consumption in sense of steel is expected to gain up by 7% CAGR until 2030. So while India consumption looks good, China does not so much. And with the production on the higher side, markets are still trying to find a balance here.
Okay, all right. Thanks a lot, Manisha, for that. Well, that's